evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo nightly video for the 22nd of April here in 2021. And we had some volatility. It's overdue. It's about time. But it was a headline about the corporate tax rate that sent the market collapsing. And that is on an intraday basis, which is what we're looking at. This is the S&P futures that fell precipitously from the high of the day at 4170 all the way to the low of the day about 4115 or 400 or 4115. And that's just a quick news headline. That's playing probabilities. That's playing that snapback fall. But it's a headline news. We can't predict those. All we can do is frame the trades, frame the probability, play the big picture on lower frames, or just keep on the higher time frame. That's one side of tonight's video, which is the news-driven sell-off. Outside of that is a discussion on the weekly expected moves. The SPX, that's your S&P 500 index, closed right at the expected move, as did the Nasdaq, and of course the Dow and the Russell are right there as well. And as we summarize today's session, the strongest, we'll take a look at all four of the markets here. The strongest was the Russell because it went a little bit higher, peaked just shy of the 2260 or 2270 point level, and then fell all the way to 2230. And that is where it held support. And the Dow mini futures with the S&P were down just under 1%. And that does include the end of day rally. But what we want to look at and compare is this end of day or mid-session news-driven corporate tax rate proposal, a decline in the equity market. And the one market we haven't discussed yet is the Nasdaq, which was weak for the bulk of today's session and took the brunt of the sell side activity. And that was down just about 1% today. And of course, the mantra is a tech, our symbol, that has a conglomerate, Apple, Amazon, Facebook, Google, and Microsoft combined together. They took the brunt of the selling too, but it was not limited to just the technology sector. What we see here is the ETF performance in our sector ETFs. So financials, these are the offensive or the economically sensitive, bullish type of sectors. That includes financials, down 1%. K is technology, that trades into, or the Nasdaq and the QQQ, that's what those play into. There's the XLK, which took the brunt of the selling alongside the Nasdaq. And Y is consumer discretionary. In the middle are industrials, materials, and energy. And that's one of the weakest sectors of today. It was hard to pinpoint one weakest sector. It's actually materials, but not by much. It was an across-the-board sell-off from all sectors. And finally, we have the defensive or the consumer staples, which is P. V is healthcare, and then U is utilities. So the selling was broad-based. The selling was a liquidation event on the big picture. But will the weekly expected moves hold? We'll be going into Friday's session, and we'll have a whole new set of expected move targets to play into next week. Speaking of next week, we still are in earnings. And something we will be watching very closely will be Tesla's earnings 2.5 days. So 2 days from now, that's on Mondays after the close. That is when Tesla will report their earnings. And its stock itself was down about 3% in today's session. So other stocks did have earnings. They included UNP, Union Pacific, AT&T, Dow Chemical, down 6% today, Biogen, Danaher, and just now we're seeing results from Intel. These are focal stocks that have earnings today, or had them today. And as we go into Friday, American Express, Honeywell, and Schlumberger. Now that's going to be the earnings front. You can take a look at those, and if you wish, position into butterflies or expected move trades on any of those stocks if that is a trade setup and opportunity for you. Now let's talk about the expected move. What we'll see in terms of the SPX, this is the auto-generated expected move. And Don does a hand calculation, but this auto-generated expected move, the red is going to be the lower bound, and that is roughly 41 and 26. Green is the upper bound, and that was not tested in this week, at least not by Thursday. That was not the case last week when the market closed right at that auto expected move. Now it traded down from it. That is the probability. A market that pushes into expected moves has at least a greater than 50% chance to rally or push a little bit above it. But it has a less than 50% chance to break and crush through it. And that does happen. When the market pushes outside the expected move, that can generate big short squeeze or another sell side activity. So it is just a probability type of game. And we look at that to build trades, build positions on an intraday chart, or as a short-term swing trader. You can do butterflies or different types of trades to hit or play for the expected move. So those were successful if you chose the downside to be achieved from earlier in the week. It was actually achieved on Tuesday. We had a rally on the Nasdaq on Wednesday, and today's session, Thursday, took us right back to the lower bound of the expected move. And again, this is the TheoTrade auto-generated expected move. You might do a hand calculation, or your own software program might be just a little bit different in terms of how they calculate the implied volatility and the option statistics that do go into that weekly expected move generated over the weekend or early morning, Monday morning. So that expected move for the Nasdaq is roughly into the 13,000 and about 740 downside print. Outside the Nasdaq, we are looking at the Dow. This is the Dow mini futures, but its weekly expected move, and that is roughly about the 33,575, where the market just about hit its low. Now that did so on Tuesday. Finally, the Russell was the only index so far to have pierced and traded under, distinctly under, its weekly expected move. And it has not done so. That doesn't really count because that is a Monday push into and then a Tuesday support bounce. That was a different week, holiday week. And the last 2 weeks have remained inside the expected move boundary for the Russell. But this week was a push outside and a return back into those boundaries. This will, of course, be true if you trade or position into the ETFs. That includes IWM. That's going to be the Russell ETF. QQQ is the Nasdaq ETF, and that is right there alongside the Nasdaq at the lower bound, into the lower bound of the weekly expected move. So, will this hold on Friday and have another bullish type of short-term bounce, rally, or support day? Or is this the time that news becomes the catalyst, maybe throw in some earnings, that does send the prices cracking, breaking, and extending under those weekly expected moves? And of course, examples of that are on the chart. Really, these red dots, if you do download the Theo auto-generated expected move indicator, the red and the blue dots will show you pierces or closes outside of the expected move, and that's just a way to study and compare. Again, markets don't always stay within them, but it's a probability function, and that helps to build trades and expectations. A breach or break or continued move, in this case, was Monday. Tuesday broke and closed outside the expected move, and we had Wednesday, Thursday, and Friday also remain above it. And that was the case here in the earlier part of January, another holiday week. So the probabilities are set, but it is not predictive. It gives probabilities, it gives trades, it gives logic framework, again, for short-term and intraday trades. If you are playing in individual stocks, make sure to note the earnings. And this column is just a days until earnings scan. It can be done as a scan, as a tool that shows corporate actions inside of a scan watch list. The way I like to do it is just with a widget, and it's a watch list widget of whatever index you might want to use. S&P 100 is what I'm showing here, and you click to sort and filter. When it says 0, that means before the bell on this trading session. 5 means after the bell, which is the afternoon session, and 1 means tomorrow. 2.5 means 2 days after the close, and so on in the earnings. Now, there's lots and lots of ways to find the stocks, plenty of websites and other features and functions within thinkorswim to get those earnings candidates and show which stocks you may be positioned in or about to put a position on that will be affected by earnings announcements. Netflix being the recent one that did have a adverse reaction on its earnings. There's plenty of stocks, and that pushed it underneath the weekly expected move, and of course within the option volatility, but not that planned expected move in the week. So the logic works on stocks, works probably better on the indices themselves, and again frames out the short-term trades, targets to play for, positions to put on, option positions particularly, and possibly those to reverse or trade or position against expected moves. Always keep them in mind, earnings as well, and headline news, as they certainly do and can quickly affect the tape. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for April 22nd, 2021.